Yo, what's up, YouTube? So, you're trying to learn about the stock market. You want a better understanding of the stock market, and you're a beginner. Came to the right place. So let's get into it.
Fuck them for life, I'ma say it forever, I ain't taking it back. Hit a lot of snatch off in the cat, nigga, that's just the meaning of slack. Working, lurking, where they at? Swerving, get back. I'm chasing them M&M, I ain't trying to be friends with them. I'm chasing them M.
So, y'all here today, you want to learn about the stock market. And what is the stock market? It's for beginners, so if you're more advanced, you probably don't need this video. This is just a breakdown of the stock market for people that don't know. So you know nothing about the stock market, you're at the
Stop it. Get some help.
You're at the right place. Basically, before we get started, bro, go check out my merch. One Dad Romance should be right here. One Dad Romance, go check us out, bro. We just dropped this hoodie. Gang. I'm going to be breaking down what is the stock market, how does the stock market work, how you can make money from the stock market. Okay, cool. So, what is the stock market? The stock market is essentially a place where a company wants to raise money, and you, the investor, you want to make money. So the investor buys into the company, buys shares, hoping that the shares are going to increase within time, within the next few years, or maybe next few months, or maybe even the next few weeks.
6.5 hours later.
So back to what I was saying. So you'll buy a piece of the company. You're buying, think of it as a pie. You're buying a piece of the pie. You're buying a piece of the pie. You own part of that company. So let's say you buy a piece of Apple. You own part of Apple because you invested into the company. You want to see your money grow. You put your hard-earned money. You put it into Apple. So you own a piece of the company. Okay, so let me give y'all an example. We're going to use a company that everybody knows about. Apple. We can use Apple. And we're going to use simple numbers. So I'm going to use simple numbers just so you can get the understanding. This is for beginners. So just so you can get the understanding if you don't already know. So Apple's share price is $100. These are not real prices. These are just made up just so you can get the video. Apple's share price is $100 a share. Each share is $100. So you buy one share. Let's say you buy one share. If that share price goes up by $5, so $100 turns to $105. Your $100 is going to turn to $105 as well. If their $100 share price goes down to $90, your $100 is going to turn into $90. Okay? So that's with buying one share. Usually you wouldn't buy one share of a company, you would buy multiple shares. So let's scale this. Let's say you bought 10 shares of Apple. You bought 10 shares of Apple at $100 a share. Apple goes up by $5. That'll be $105. Each share, $105. So that $105 times 10 because you bought it at $100 a share and you bought 10 shares. So you spent $1,000 and you bought 10. 100, 200, 300, 400, 500, so on. So you got 10 shares and you spent your whole $1,000. If that $100 share goes up to $105, it increases by $5, then you make $5 off each share. So what you would do is do 5 times 10 because you have 10 shares. Each share went up by $5 and that would be your profit, which would be $50. That's if it goes up by $5. So let's just say that share price goes up to $130. This is what you're hoping for. Really hoping it goes higher, but it goes up to $130. Boom. Each of your 10 shares that you bought, that $1,000, because remember you bought each share for $100. Each of those shares are going to go up by $30 because now the $100 share price actually turned into $130. So really you can just look at these like $30. 30, 60, 90, so on. So you made $30 off each share price. So 30 times 10. This was $100, but it increased and it went to $130. So now you're going to do 30 times 10. 30 times 10, that's 300. You make $300 off of your $1,000 investment. That's the goal of the stock market. So let's say it goes up even more. Let me give y'all one more example because I want you to get this. The $100 share price that Apple started at is now at $200. It's at $200. So when you was looking at the app or whatever you're looking at the stock on, it was $100 when you first looked at it. You look a month later, and now it's at $200. So for each share you bought, it increased by 100%. Okay? So it doubled. That's why it increased by 100%, because it doubled. Alright? So you put $1,000 in. So you got those shares at $100 a share. So you got 10 shares. You put $1,000 in. You bought 10 shares when it was $100. So now you own 10 shares of Apple, and it just went up to $200. So all you're going to do, simple math, times 2 whatever you put in. You put in $1,000. That $100 went up to $200. You have $2,000. You made $1,000 profit. Easy. You made $1,000 profit. So now we're finna talk about if it decreases. You bought Apple at $100 a share. $100 a share you bought Apple. You bought 10 shares at $100 a share. Each share was $100. You get one share for $100, so you bought 10 of them. You bought 10 of the shares. Okay? So you have $1,000 invested in Apple. If that $100 drops to $80, you still have your 10 shares, but now you're down $20 for each share that you bought. So 10 times 20, 200. You're down $200 because you put $1,000 in. The $100 drops to $80. So now you have 80. You have 10 shares, and each share is $80. So 10 times 80. 10 times 80. That's what you would do. 10 times 80. That's $800. You lost $200. Okay, cool. So it works both ways. You can earn and lose money. What is that? Anyways. So yeah, you can earn and you can lose your money. But you should do your due diligence, research. Any stock before you invest it, you should do your research. That's vital. It's vital that you do your research. Because you know what you invested in. That company drops, you'll be confident that the company is going to bounce back because you know what you invested in. So that's basically how the stock market works. Also, I didn't talk about it a lot here, but also be aware of risk management. Be aware of how much money you put into a stock. If you can't risk it, bro, don't do it, bro. You could blow your whole account. You could blow all your money. Your money gone. Once it's gone, it's gone. So be aware about how much money you put into these stocks, because once the stock drops and your money is gone, then it's gone. So that's basically how the stock market works. Nothing to it. It's simple. It's easy. You just have to find what companies to invest in to actually make profit, and you don't want to lose your money. So be careful. Risk management is very important. You don't want to lose all your money, blow your account. Appreciate y'all for watching.
I'm Eminem. I ain't trying to be friend with them. I'm chasing them.